The shorts are definitely getting squeezed today with the two largest shorts out there, with Clover Health and Workhorse getting squeezed today. In this video, I'm going to talk about specifically Clover Health, also just a general idea of what shorting is, a short squeeze, and then some of the metrics that we can look at to see what makes a stock a good candidate for a possible short squeeze. During the frenzy of SPAC deals last year, billionaire Chamath, I don't even want to try to pronounce his last name, brought on Clover Health through his SPAC. Everything was fine with the company up until there was a report that was released by Hindenburg on February 4th. On that day, Hindenburg Research released a report basically calling out Clover Health as well as Chamath on the fact that the company had undisclosed Department of Justice investigations going on while they were going through the SPAC. Long story short is year to date, Clover Health has been getting absolutely annihilated, and with that came a huge short interest. Over the past 5 days, it shot from $7 all the way up to $21 and actually got to an intraday high of around $25 today. While I don't want to talk about the details of why Clover Health was being shorted to oblivion, I do want to talk about the short interest, where you can find it on Yahoo Finance as well as other websites, how often it's updated, all that good stuff. Really quick, I want to go over the short selling process. A short seller is someone who wants to make money from a stock going down. So what they do is they go to a broker, borrow shares of that stock, go to the market, sell those shares, and then later buy those shares at a lower price, pocketing the difference as a profit, and then they return those shares to the broker. During a short squeeze, what happens is the stock starts running up, and then all of a sudden all these people that were short start losing a lot of money. They lose so much money that the broker calls them up and says, hey, listen, you got to return these stocks. So they end up having to buy that stock, which adds buying pressure to the stock, which basically just adds rocket fuel to the stock, and it just goes straight up. If you're wondering where you can find short information on a stock, if you go to Yahoo Finance and go to the statistics tab, scroll down to share statistics, you'll see some short information. Metrics such as shares short, short ratio, short percentage of float. What do all of these mean? Well, shares short just means how many shares are actually borrowed and sold short. Short ratio is taking that amount and dividing by the daily average volume. So this is how many days it would take to cover these short positions, or for the shorts to unwind their positions. Short percentage of float, let's talk about what the float means. The float shows how many shares are being actively traded. This is 112 million shares. Shares outstanding represents all shareholders, but there are institutional share blocks and insider shares that aren't necessarily liquid. Short percentage of the float is just taking the short shares divided by the float shares. Short percentage of shares outstanding, you can guess that's short shares divided by the shares outstanding. And then this is just the prior month. What's also important to remember on Yahoo Finance is you can see there's a timestamp of when this information was relevant. This was updated May 14th. As of this video, it's June 8th, so this isn't the most up-to-date information. So where can you get it? FINRA actually only requires firms to report short interest positions twice a month. So the free information on short positions in different companies only comes out twice a month. Looking online, there are paid services that provide information that tries to get as close as possible to the daily short percentage. Now, I haven't used any of these, and Ortex was just the first one that came up, so I have no idea which websites are good and if it's even worth it. That information is out there, and there are services, you just have to pay for it. The second question is probably, how do I find the stocks that are most shorted? Because I was talking about how Clover and Workhorse were the two largest short positions out there. So how did I know that? There is a website out there, highshortinterest.com, which aggregates all of the highest shorted positions. So Workhorse, Clover are the two highest positions that have been shorted. It's also important to remember though that this isn't updated daily, and the last time that this table was updated was May 27th. Once again, it's a good way to get a general sense of, okay, these 20 tickers are the highest shorted stocks, but it doesn't update daily. As for a percentage that I would consider high as a short interest, I would say anything above 20% is relatively high. And the ultimate question is, when will a short squeeze actually happen on a stock? Usually the normal triggers are really good news, or if a stock is so shorted that the valuation is kind of insane, and there's a point where, okay, it doesn't make sense that it's at this value, so you may get some buying, and then all of a sudden you get a short covering, which could cause a squeeze. And then the third trigger is Wall Street Bets. Ever since the explosion of GameStop back in February, Wall Street Bets has also exploded in memberships. Now, this is a subreddit and it's free to join, so there's over 10 million members. When a stock gets talked about on Wall Street Bets, you can see some extra volume or people buying, and it feels like there is an effect from Wall Street Bets. I'm not saying it's 100% Wall Street Bets, but when you look at the amount of posts that are talking about Clover and you have 10 million people, if people are just putting a little bit of money into these positions, it could cause a spike in volume, spike in price, and then cause a short squeeze. Now, the best situation is when you find a stock that you believe is actually undervalued and isn't getting the credit it deserves, and it has a huge short interest. Because all of a sudden, you have a stock that you already like, and it already has extra fuel to the upside because people would be forced to buy if there's a short covering. So when it comes to short squeezes, you want to get in early and out, because what tends to happen is you have a huge run up and there's all this hype and FOMO around it, and the people that got in early can make a crazy amount of money. But then if people get caught up in the FOMO and buy at the top, the stock tends to walk down months afterwards, and there's a lot of bag holders that are created. So it's definitely more of a trade than a, oh, I should invest in the short squeeze. Unless, of course, you actually like the investment for the long term, so you don't care if there's a pullback. There's three ways I see playing the short squeeze. One, have an investment in the company, which in that case, today was a great day for you. Secondly, you can see the breakout. The morning volume was huge. It was breaking above the all-time highs, and it already has a massive short interest. And with everything going on in the market, it just seemed like it was gonna run. I'm not a day trader by any means, so predicting daily movements is not my thing. It looked really strong this morning. So you can play that move to the upside on the breakout. The second way I play it normally for short squeezes is the implied volatility when it comes to options. So very similar to my last video, if you haven't checked that out with BlackBerry, I would do something very similar. Just looking at the implied volatility for the puts that are 10 days till expiration, the IVR in Clover right now is 117, which is crazy high. Obviously 52-week high when it comes to implied volatility. So selling something closer to that breakout area of $12 or $13 on the strike side, and then just having the implied volatility come out of it, even if the stock comes down or if it keeps on going up. Hope you learned something today. If you did, give this video a thumbs up and consider subscribing to Main Street Wolf, where we talk about options, stock investing, anything to do with money. Thanks guys for watching, and have a great day.